Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, 25th day of April 2019, and this is the daily report for gold and silver. We do have a mixed bag again in the precious metals markets, with gold and silver trading fractionally lower on the day and platinum and palladium trading fractionally higher. We did see gold trade to a higher high than the previous day today, as it traded up to 1284.80, and that was an early morning trading, a reflection of the Dow, which at that point was trading down about 280 points. Now, the Dow did close well off of the lows, but still finished down about 134 points, with the NASDAQ closing at new contract highs. Dollar provided just a little bit of headwinds, trading up 0.03%. So fractional gains in the market in terms of the dollar index. And let's take a look at our price board. Currently, we have gold fixed at $12.79 even, and that's after factoring in today's decline of approximately 40 cents on the day. Silver also losing just a little bit over 0.1%, down about 1.5 cents at $14.90. But as I said, platinum and palladium had fractional gains on the day, a gain of $2.20 in platinum futures, $8.90.80. And then when we look at palladium, not much difference, about 0.2%, $14.07.90 at closing up about $2.80 today. Let's take a look at our technical studies. Traders, very little change in terms of pricing today in gold, with most active June futures closing down about 40 cents, currently at $12.79. However, when we look at today's candle on our daily candlestick chart, what we can see is that it was a green candle. That simply signifies the fact that it closed higher than the open, although it closed lower than yesterday's close, and that's where we're getting the decline on the day. The one thing that I believe is most noteworthy of this market, and this has been throughout the week with the exception of Tuesday, is that ever since we hit these lows back mid last week, for the most part, we have been forming a base and trying to see this market have some potential support roughly in the area of the 0.50 Fibonacci retracement level. I believe that to be a pretty key level and a critical level to hold if we expect at this point any kind of conclusion from this most recent correction. What we can say is that over the last couple of trading days, ever since hitting this extreme low at 67 here, the last 2 days, meaning Wednesday as well as today, can be really seen as days in which we had higher highs than the previous day as well as higher lows. And that, of course, is what we look for in a market that is moving higher. However, the price action has been so scarce in terms of any kind of a range that until we get a respectable bounce above this with a long green candle or a break below this on a closing basis, we're not really getting a true indication of where gold pricing will go from here. What we can say is that the fundamental factors that have caused this most recent sell-off in gold, as long as they remain strong and prevalent in the marketplace, we can expect sideways trading action or some sort of a base forming if we don't go to a lower low. If we do break through this low here, which resides, as I said, at about 1273, my guess is that our next real target is going to be roughly the 1250 area, and that would represent the 0.618% retracement level. It is for that reason that my recommendation is to maintain our current flat position until we see further evidence of either a decline in price by breaking below current support levels or having a significant pop and a strong up day, which would be indicated by a large green candle. The one thing that we can say about trading today is the strength of that downtrend has pretty much waned, and the best way to see that is really to take a look at a Japanese average chart or Henkin Ashi. And traders, I've just converted this daily into the Japanese average chart. It is clear to see, and we've talked about this over the last 3 days, is that what we are looking for as a market declines, what we're looking for as an indication that that correction is either losing steam, that the downtrend is running out of steam, or that a pivot is imminent in some ways, is to see a couple of things happen. We determine the strength of a trend by the body size of a candle. For example, in this uptrend right here, you can see that we've got large bodies in the market, and we also have the absence of these lower wicks. The opposite is true in terms of wicks for a downtrend. It is the upper wicks that we need to see an absence of to indicate that that downtrend is still intact. And when that is coupled with a large body size, as we see really at these candles right here, that is telling us that the current downtrend should still continue to have some steam. However, when that pivot begins, it doesn't begin always very smoothly, but what we see is a decrease in body size to a doji-like candle and the return of wicks, upper wicks. And that's exactly what we talked about both yesterday as well as on Monday. Monday, we had the first occurrence since the market really turned green on a Japanese average chart or Henkin Ashi chart. We had the first occurrence of the upper wick that was followed by an exaggerated low, and that was the lowest trading point of the year. And that was immediately followed by a pure almost doji that came into the market yesterday. Now, if you take a look at today, we've got a longer wick, and most importantly, this candle has turned green. And that is indicative of the real potential of seeing some sort of a pivot, a conclusion of the correction, and a move to the upside. It's still a little bit too early to tell, but if the market is going to turn and begin to trade higher, this is exactly what we want to see in the charts. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.